Oh gosh. That was a fire intro, man. I can't believe I just missed all that.
All right. It's all good. It's all good.
Gotcha. So the reason why we're doing this, guys, is because we want to give back to you guys. And our mission goes very well with what Vina Jetty had told us. And I'm gonna repeat myself. I know you guys have heard me say this thousands of times, but Vina Jetty had once been on our Zoom a couple weeks ago, and someone asked her, "How can we partner up with you? How can we bring you deals?" And she said to that person, "You probably don't want to partner up with me because I'm at a different level. I'm just going to take it over, and you're probably not going to learn anything because I'm just completely going to take the deal." And what she did say is, instead of bringing a deal to me, bring a deal to someone who has done one or two deals ahead of you, and take it to them, because you're adding value to them. But at the same time, they're going to take you with you because they'll have that bandwidth to teach you everything along the way, and you can get your first deal done. And so with that, that opened up our eyes, because that's exactly what we wanted to do. And we're doing that right now with another group. Like, we're helping them get their first deal, because we've only done 2 deals, and this next one will be our 3rd deal, but that'll be their first deal. So imagine that, guys. Like, imagine being able to help someone get their first deal. And that's our mission for you guys. Is you don't have to bring us your deals, but we want to help you and equip you with everything that you have, or everything that we give you guys, so you guys can go and either do your first deal or help someone else go do their first deal, and pull them up with you so that they can go on that journey with you. All right, guys, got to get some fires in the chat. Are you guys ready to dive deep into Deal Analysis 101? Where my fires at? Where my fires at? All right. Got iPhone in the house. Awesome. Let's go. All right. Let's get started then. Again, this is Deal Analysis 101.
This is going to be a good one, guys. I'm excited. I'm excited.
Market analysis. Man, I've been wanting to teach this for a while, guys. I'm excited. So market analysis, we look at 5 metrics. And again, I'm going to, just for the recording sake, I'm going to put this out there again. We get all these metrics from Neil Bawa, since I wasn't recording earlier, and all the metrics from Neil Bawa. So if you guys know who that is, you probably will recognize these metrics that we go off of, but these are the ones that we do as well, just so that we know we're getting into the right markets. Because there was this one deal that Joseph really loved, and it was a class A, and it would look perfect. The numbers checked out. And then when we did a market analysis on it, every metric did not check out. And so that was the deciding factor on why we didn't do that deal. So it is important to know what those metrics are, because if you don't, then you could be in trouble in the long run, especially in these smaller markets that depend on certain types of jobs like oil or something like that. And if they're gone, what do you do? Right. So you got to prepare yourself.
I was heartbroken. It was a beautiful deal, brand new asset, and we had to walk away. We were in the best and final and everything, but we had to walk away because it just did not check out any of these. So we learned a lesson not to think about the deal first, but we need to figure out the market first. So that's why we're starting with the market analysis first on this.
Yeah, I was about to say, I felt bad for our broker, because now he has to go back and say, hey, never mind, my buyer who was super interested and was gonna put in the best and final said never mind, and so that was like something we learned. It's like, okay, that needs to be the first thing that we look into, because like, I don't want to make my broker look bad because now he's having to backpedal because I didn't do my homework first. So that was a big lesson.
Big lesson. And guys, here are the 5 metrics, and we're going to dive deep into these so you guys can kind of know. Well, it's more going to be on a higher level, but so that you guys can go ahead and start implementing this in your market analysis. But the first one is the population growth. The second is the median household income. The third one is the median house/condo value. The fourth one is the change in crime levels. And the fifth one is a 12-month job growth percentage. And again, we're going to go through some of these so you guys can get a better understanding. And all the metrics that you guys can look at and find out, I'll teach you how to get to those so you can go do your own due diligence. So we'll start with the first one, population growth. How can you get this data? Guys, this blew me away how simple it is. And some of you guys who already know Neobawa, you already know what I'm talking about. But it's Google. I mean, it's that simple. It's that simple, guys. And what I mean by Google is some of you guys will be asking, well, what do you search for, right? Well, it's pretty straightforward. All you do is search for the city, state, and then population. So if, for example, if you wanted to put a city and state in there, you can put Conroe, Texas population in the search bar, and that's what it's going to bring you. So here's what that would look like. When you type that in, you're going to get a graph that shows you the population growth in that specific market. So for example, if you look at the graph, it starts off in 1990. I know it's a little hard to see, guys, but it starts off in 1990 and it goes all the way up to 2020. And you can see that there's a clearly a upwards trend on the population there, which is super healthy, extremely healthy. And Joseph and KJ, you know, they're familiar with the Houston market. They can absolutely confirm this without a shadow of a doubt. And the numbers don't lie, guys. So that's the first population growth metric that you can start checking immediately. And then I'll go in the next slide and tell you what exactly it is that we look for specifically in that metric. Look good, Joseph? Anything you want to say there?
No, I mean, it looks good. I guess the only thing I would want to add is while you're looking at this, you can move your pointer over the bar and you can actually, it'll change this number where it says 94,400. It'll actually change that number so you can get a better reading on it. So you just move your mouse over the bar and it will actually give you the number where your mouse is pointing at.
Exactly. And for this example, we use Conroe, Texas. So that's where that's coming from. And so what the specific metric that we look for is, what do we look for in the population? Well, we look for anywhere from 250,000 to 1 million people in population. We want a growth of 10.6% from 2011 to 2020. And then if it's a smaller, or if it's a larger population, 1 million to 2 million in population, then we want a growth of 7% from 2011 to 2020. And then I believe if it's below 250, if it's below 250 in population, you want to see a growth of 15% from 2011 to 2020. So again, our metric for the Conroe population definitely meets that. And I think when we put it in, I don't remember what that was. Was it a 50 something increase?
Yeah, it was a 50% growth.
50% growth, guys.
Damn.
That's crazy.
Yeah. So with that one metric in the chat, guys, does that population growth look good for Conroe? Yes or no? I got some yeses and nods in the okay, cool. Appreciate that. Cool. Yeah, definitely a good metric for sure. So that's population growth. That's the first metric that we look at, and it's super simple. You can find this by just going to Google and typing in the city, state, population. That's it. You'll get that come up. That comes up, that graph. And you can look around, just like Joseph said, you can move your cursor around in the blue area and it'll show you different population growths in that specific time frame. Oh, and I forgot to mention, so these numbers only apply for 2023. They do not apply for 2024. So it'll apply for this year only. They're going to change, obviously, because population growth changes and migration patterns change. So just for you guys to know, this is good data for this year. Okay. All right. The next one is the median household income. Again, what metrics do we look for, or should you guys look for in the median household income? We want to see a 35.2% median household income growth between the year of 2000 all the way to 2019. Where can you find this information? city-data.com.
Oh,
Freaking amazing website. When we found this out, guys, we were like, this is a game changer. There's so many metrics here that we can look at just by going to this, and it's all free. It's
that's
all
the best
free,
part,
guys.
right?
Yeah. All free, guys. So we're going to show you a little bit what that looks like. For example, if we take the same the same city that we were doing, Conroe, Texas, the median household income at the top, you can see that it says I will go to the right hand side first. It was 34,123 in 2000, and as of 2019, it's $69,077. So it's a good increase in the median household income. And to be more specific, when you look it up in city-data, there's a map that you can go to, and Joseph categorized it by the median household income since 2000. And on the right-hand side, where he has it colored in green, circled in green, the median household income is a 50% increase, guys. What was the metric we were going by, Joseph?
This one was a 35.2, if I remember right.
Yeah, 35.2. So is this a good metric, do you think?
Yeah, definitely.
Perfect.
And then I also want to point out in the middle, there's also a circled green right there. You need to make sure that you select that button, not the top one, because it defaults to most recent value. You need to make sure you do percent change since 2000. So just make sure you hit that button to show the percent change, not just the most recent value.
I think some of these people already in the chat are looking at their markets right now, like population, median household. Yeah. Perfect.
Love it.
All right, so the next one is the median house condo value. And this is important too, because you want to see the trends on what the markets, or I'm sorry, the house or condo values are, if they're trending upwards. And typically when they are, that's a good sign of growth. And we'll kind of show you guys what I'm talking about here. But again, how do you look for this metric, or what do we look for in this metric? We look for a 56% growth in median household or house condo value between 2000 and 2019. And where can you find this data? City-data.com. The same one. And specifically for this one, because Joseph and I were looking at this market last night, and I had already researched it as well, but in Conroe, it's an estimated median house or condo value in 2019 of 212,000, and it was 71,800 in 2000. So our specific metric that we're going by is the same one that Neil Bawa goes by, is the 56% growth, and this one met that metric. So typically that means that, you know, these areas are, you know, there's job growth, or it's trending upwards, and it's another metric to go by and say, okay, yeah, this market is, you know, it's good. So far Conroe has met 3 of the metrics that we're looking for out of the 5, and we still got 2 more to cover. But the first one was the population growth, the second one was the median household income, and then the third one is the median house/condo value. And then we'll go over the next 2. And but this is a good way. So Joseph, you've got a great city and town here, bro. It's good so far.
I know, it's a good one. I like living out here. All it's missing is a nice river to float.
All right. The next one is change in crime levels. What metrics do we look for in the crime levels? We look for a 450 crime index or below. And a lot of people, or I'm sorry, where would you find this metric or data? Again, city-data. You can get this metric here. And whenever we plugged in the city and state for Conroe, we get the, if you scroll down a little bit, you'll find that there's a graph or a table, right? And in this table, you can see at the very bottom, the one that's highlighted in blue, that's the crime index that we're looking at particularly. And we look for 450 and below. And if you can see on the left-hand side, and it starts in 2006, it's pretty consistently trending downwards. And when Joseph highlighted the last one in 2018, it's at a 211.8. So this definitely meets the crime index. So we're looking at 450 and below. So this one is good on the crime levels. And I'm excited because that actually, Joseph, that's one of the lowest ones I've seen in comparison to some other cities out there.
I haven't seen one that low in a long time. Normally I see like 500, a 600 here and there. Like we were one, now that I think back about it, one of the markets that we were seriously considering a deal in, I remember looking at this and that number was like 650. Now that I think about it, that was before we honed in on the market analysis first. So good thing we didn't pursue that one.
Yeah,
Which was a nice area to live.
Yeah, I know.
definitely. And then the last one, guys, is 12-month job growth percentage. What do we look for in this metric? We look for a number above 4% annualized job growth, or 3% for cities over 1 million in population. And this one, you can find this one on Department of Numbers. And I'm going to leave that up there for you guys to maybe, Joseph, you can put it in the chat
Yeah,
so
I'll
that
do
people
that.
have it. But it's departmentofnumbers.com/employment/metros. And this is very interesting because you'll get to see what the top cities in the nation are trending as far as job growth. And it's very interesting to see there's a lot of cities that are always on that specific website for trending upwards in job growth. And there's cities that you may not see very often, but they make it there every now and then. And those cities could be cities like, oil cities, or, just very, just those types of jobs that vary on the market that are, I would say, if you are going to check those out, just know exactly what specific industry is in that market and how, the trends of that specific job growth would be. Because I know there's markets in Texas that we've looked at, like Midland and Odessa. And although it looks great, it's on the website that's saying it's trending. It's an oil town. So if the oil's not there, then all those jobs go away. And that can happen like that. So you guys have to be prepared and know that specific market. But Joseph put that website in the chat so you guys can access it. And when we looked at it yesterday, we were studying it as well. It's pretty interesting because what you want to do is when you go to it, you're going to see this particular screen or whatever. And what Joseph did is he clicked on the 1-year CES job percentage change and made it filter where it started at the very top, going downwards to the least job growth. And you can see some of these cities. And Joseph, for this one, I'm going to flex a little bit, but Dallas is on top this time. Houston is at the bottom. But Dallas and Houston are typical cities that you'll see on here trending all the time, right? So these are some cities that you would definitely want to look at. Again, this is what I was talking about. Midland is here. And Midland, although it looks good at the moment, could be a city that you might want to tread carefully because it is an oil town. And there's a bunch of different cities here that you can take a look at. But this is a strong indicator that these here have really good job growth percentages here. And again, our metric was, correct me if I'm wrong here, Joseph, but it was like a 4% or something like that.
Yeah, 4. And then anything over 1 million in population, we're looking at 3%. And remember, guys, these metrics that we're giving is for this year only. It's going to change every year. And one thing that Neil Bawas mentioned about specifically about this year is the reason that we're looking for 4% or 3%, depending on which city, is because we're coming out of this whole COVID scenario, right? So there is a huge increase in jobs. It's more than normal. He said typically that number is not 4%, that number is 2%. So keep that in mind as well, that this year is definitely a little bit of a freaky year. So you want to re-up your knowledge on this consistently. I would say at a minimum, at least twice a year, go and really dive deep on this. And I would say update yourself at least quarterly on a regular basis, at least be familiar with it. But that's the tidbit I'll add to that. And to what Oscar was saying about the right side, that column, to do that, you click it twice. So if that makes it easier, this is as soon as you go to the website, this is right there on the page. You just scroll down a little bit and it's a huge list. It goes on and on and on. You just click that right column 2 times and it'll organize it in descending order.
Yeah. And Natalie, to answer your question in the chat, because she's asking, what are the considerations about oil towns? The way Neil Bawa put it is, if you are going to be in those towns, just understand the industry very well and study it. Because if you know that something's going to happen with the oil industry, then that's that's an advantage that you can have over on some of these towns that are dependent on oil. Again, it's very drastic. It can be, if the jobs are there, 1 year, they may not be there next year, so just be on top of it. That's what I would say. All right. So that was the 5 metrics for the market analysis 101. Now I'm going to go over some of the financial stuff that some of you guys already know what I'm talking about, but this is also important for you to know in order to do your deal analysis as well. So the financials is, what do you need for you to analyze a deal? Well, I think everyone knows here that we've been preaching this for a very long time. You need the 3 documents, right? You need an offering memorandum or an OM. You need the T12. You also need the rent roll, right? And also other questions you can ask either the seller or the broker just to help you out a little bit more is, is there an assumable loan? And are they open to anything creative like seller finance or something like that? So those would be other things that you want to look for when you're doing your deal analysis 101 alongside with your market analysis.
Yeah. I'd also like to add that on those last 2 questions that Oscar brought up, you don't want to just stop there, right? Is there an assumable loan? Yes. Okay. Do I just move on? No, you want to know, okay, if there is an assumable loan, what are those terms? Like, what's the remaining balance? What's the interest rate? When's the maturity date? Is there an interest only period? You want to know everything about that loan. I mean, if they say no, then okay, you don't need to ask further. And then the same thing with seller finance. Don't just say, hey, are you open to seller finance? Yes. Okay, move on. No, you don't do that. You want to make sure, hey, what would you like to see as potential terms? What is the seller looking for on the seller finance? And I see Brett in the side chat. He says, is it a bridge loan? I would not assume any bridge loans right now, but yeah, that would be a really good question to ask. Is it a bridge loan? Generally, you'd be able to tell from the interest rate, and most bridge loans right now just don't work anyways. So you'd be able to tell, even if you don't ask, you'd be able to see by the interest rate and usually by the maturity date as well. And I see Ryan, he threw in another question, which is a good one. He said the whisper price. That's a good one to ask as well. What's the whisper price on the deal?
Mm-hmm.
And then just answering Patricia's question, she says, so we should look for 4% job growth in the past year over several years. You're just looking at the most recent 12 months. That's it for that metric. You're only looking at the 12 months. So that website only shows that column that we're talking about on that website we gave you is only referring to the most recent 12 months. If you look right there, that's it. And then that's 1 year. And then the second column where it says December 22 is showing 1 month change. So we're looking at the 12-month change only.
Mm-hmm. And then there was another question from, I think, Lena, that says, do you look at these metrics at a city standpoint as well as zip code levels, specifically crime? Yeah, definitely. I think it's worth that and understand the market. We definitely did do that in a property that I was looking at. And the reason I know a little bit of Conroe and how it was trending upward is because I was looking at a property, Lena, in Conroe, and specifically dove deep into that zip code where that property was at. And I saw that the metrics there were a little rough, or it was a rougher area in Conroe. And so, I saw that the crime was up, and the median household income was an average of like 25 to 30,000 a year. And overall, the city is awesome, but you do want to dive deep into that specific zip code or neighborhood if you're looking at a single family space.
I love Natasha's question here. It says, what if one metric doesn't pan out so well? Do they all have to pass? It's a beautiful question. You're getting ahead of the game, but you know what? Let's just answer it anyways, because I like it. You're overachiever. So ideally, you want to hit 5 out of 5, but not every city will hit 5 out of 5. Some will hit 4 out of 5. Some will hit 3 out of 5. Some are only 1 out of 5, right? it's up to you where you kind of stop that. But from Neil Baldwell's mouth, what he said, I wouldn't really do anything less than 3 out of 5, because as soon as you're doing less than 3 out of 5, why are you even wasting your time looking at the metrics anyways, if you're just going to do what you want? So I like how he put that. It was pretty funny to hear. So what we would say is you're looking for at least a minimum of 3 out of 5. And just because it's 3 out of 5, I don't know that I would necessarily just, hey, that's a deal right away. I would really look further into it. If you're at 3 out of 5, 4 and 5 out of 5, I think is pretty good to move forward with, as long as the deal makes sense, right? Can you spell his name? I think that's how you spell it, honestly.
No, it's like this. I just spelled it. You're good.
There you go. Boom.
Yep. Awesome.
Yeah, I'm not the best at spelling, so.
If you guys are getting value from this, it would mean so much for you guys to post about it on Instagram, Facebook, tag us, let people know that, you know, what you're learning in here. That would be super awesome.
For sure. All right. So let me break down the OM a little bit. I'm not going to go into it because we've done Zooms on this, but I feel like sometimes we get an OM, and for the most part, a lot of us just kind of toss it aside, right? I know we did for a long time, and we still kind of do, because it's a lot of fluff that they put in there. It's marketing material to make the property look nice. So of course they're going to put in a bunch of stuff in there. But I think there's also some good stuff in the actual OM that you guys can take and start doing your own due diligence if you don't know that market, right? For example, they typically give you like a table of contents of things that you can look at. And again, just take it with a grain of salt. You know, obviously I don't ever trust this information. I like it. I will always trust but verify, but it gives me an understanding of things that I can take a look at in the specific market. For example, I like to look at the area map of things that they provide in here. And based on this map, this is Oklahoma City, and this is what they're saying that's around the particular property, like jobs and retails and all that kind of stuff, stores. You know, I want to go ahead and verify this information if I'm really getting into the nitty and gritty, especially if I'm getting close to getting an LOI accepted. I'm going to go and verify all this stuff, right? I want to know that for sure that there's going to be a Best Buy nearby, or if there's going to be like a Home Depot or the Bass Pro, you know, all that stuff. I'm going to go and verify and see. But this gives me an idea of some of the things that I can go into and start looking at this immediately. If you had asked me this before, do you take a look at the OM? I probably would have said no. I just throw that thing, I chunk it, right? But now I kind of look at it and just kind of get an idea of what's around in that area, specifically if I don't know it, right? But I know Dallas, you know, Joseph and KJ know Houston, and we're familiar with Austin, San Antonio, but we still want to, you know, we still want to look at something like this just to have an idea ourselves. Another thing that I look at in the OM, and Joseph does too, when we underwrite Ione, is the top employers in there. Sometimes they'll have this information, sometimes they don't. Again, you want to verify this. This is all from the OM. They're going to, you know, someone put on there, Alfonso, it's all lies. That got me cracking up, man. Yeah, you know, you want to trust but verify, right? I'm always going to preach that to you guys. We all do, you know, trust but verify all these metrics that they're putting in here. But, you know, with those metrics that we're giving you, that's why I wanted to give you these metrics, guys, because they fluff it up, but you want to go and do your own due diligence and find out yourself if what they're saying is actually true, and kind of get an idea yourself of what you're looking at. So the OM does have some things that you can go off of, but again, I would never trust it. I would go and verify this information yourself. All right, and I'm going to touch up on the T12 because, again, we've gone through a bunch of this stuff. Maybe, Joseph, you can go through this real quick just so that people know why we put this slide on here.
Yeah, definitely. So this is, I would say this is probably your most important document, because this is like a snapshot into the last 12 months of the property that you're looking at. So very, very high level. Like Oscar said, we've done multiple videos going into the underwriting, going over these things, but it is extremely important part of your deal analysis. You want to do the market analysis and then the actual deal analysis as well. And that's the underwriting portion. So if you just very high level, how you read this is every line item is a new expense or income, right? So if you see rows 8 through 19, where it says total income, those are all of your income items. You have your rents at the top, and then everything below that is your other income. And it's broken out month by month by month. And on the right-hand side, you have totals. So that's how you would use the income, or the trailing 12, to see what the income was, to see what they're doing on the property, to see if what they're hitting each month. You would want to look through this to see if there's any crazy fluctuations. And then you're also going to take this information and put it into your analyzer to underwrite your property thoroughly. At the bottom half, I think that's row 21 or something, it had expenses. And then this is the continuation of expenses. This was a really long T12. It was a bunch of stuff in between, but we figured you really only needed, for this example, just the top and the bottom portion, just so you can kind of see. So this is some continued expenses, same thing. It's broken up month by month by month, shows the totals on the right-hand side. And then if you go to the very bottom, it says expense, and that's going to be your total expenses for all of your line items added up. And the very last line is your net operating income. That's a very, very important metric there. That shows you how much the property is producing. That's the net operating income of the property. On this example, they don't have totals for those line items, but it does have the monthly. And you can see on some of those months, there's some parentheses, some negatives. So on August and November and December and February, they were negative in those months. So that would be something that's concerning for me. I would want to go and see, I would look up and down these columns. What happened in those months? Why are they negative? And it could be something like, hey, they paid taxes in that time, or there was a big repairs and maintenance budget in those months, or something like that. And that would give me more questions to go to the broker and or seller to find out more, dig deeper into that pain point. And I saw somebody's question, Alfonso said, is bad debt considered an expense? Not necessarily. Bad debt would be, Oscar, can you actually go back a slide? It would actually be in the income section. They probably have it. No, okay, but we'll use, no, I don't see anything on there. There's row 15, that says other miscellaneous income. If you see that there's those first two have parentheses around it, that just means that's a negative number in that column. So bad debt, that's money that you're technically losing, like could be someone just not paying their rent or whatever it is. That would be calculated as an income, but it would be a negative income. So it would show with parentheses for that number. And if ultimately it's counted as an expense, but as a negative number, as an income, as a negative number in that income column. I hope that made sense, because I kind of started jumbling it. I know what I'm talking about. I'm just not the best. I'm the integrator, man. I'm not the one good at relaying the information. KJ tells me all the time that I'm not a very good teacher with my thoughts. I can't express myself what I'm actually trying to say. See, he got it a little, man. you just reinforced what KJ says. Yeah.
Okay.
So the answer is, it's not an expense. It's technically an income, but it's a negative income.
Okay, yeah, that makes sense.
There we go.
Short and simple. Yeah, you lost me earlier too.
Damn,
Awesome.
I'm
And
trying
last
here,
one-
guys. I really am.
The last one that was on the list was the rent roll. And maybe touch up on this one too, Joseph.
Yeah, very, very simple here. This is just a snapshot. I would scroll down to the bottom because the rest of it, and guys, every T12 and rent roll is different. You're never going to find two that are the same. They're all different. Some of them look like this, like a straight up Excel sheet. Some of them are just a PDF, like a picture. I had one that's handwritten. Like you're going to find different ones all over the place. This is just one example, so you guys have a relative idea. It's very simple to read. You have your rows. That's each new tenant or each unit. It has the resident name that's in row or column D, and it has the rent that they're paying, the utilities they're paying, parking, any additional rent plus. I don't know what that is in this scenario. It would be a question I'd want to ask. It could be something like a credit builder charge that they're paying for that, or maybe it's renter's insurance or something. Oh no, they have insurance in the next column. So you never know. You just, if there's something you don't know, ask the questions about it. That's all there is to it. Just, you're going through this information to underwrite your deal, as well as dig deeper into what things you don't understand. Some rent rules will also show a market rent column. I think that column is very helpful sometimes because it gives a good idea of what they think the pro forma rent should be. And it gives me a good target to go and try and find. So at the bottom, it shows the totals for each of those columns. I love when it has the totals. It's very helpful for me in my underwriting. Very simple, guys. That's what a rent roll is. It just shows you a snapshot of whatever month it is that they're showing you of all the people living at that current property.
Cool. So a recap, guys, of everything that we went over. So the first part was the 5 metrics for the deal analysis or the market analysis that you did, right? And those 5 metrics were the population, the median household income, the median house/condo value, change in crime levels, and then the 12-month job growth percentage. And then the other side on the financials were the OM, the T12, and the rent roll. This was a game changer, guys, whenever we found out these metrics, because at first we were just going at every market and we were like, yeah, if it's landlord friendly, that's all we care about. But then, but then we found out that it wasn't like that at all. We had to go and dig deeper into the market itself, right? Like I said, Joseph was heartbroken because we had a Class A beautiful property in a small town in Texas, and numbers looked great. We were in the best and final, guys. And then as soon as we started looking into these metrics, thanks to one of our potential partners from this community who we learned, they taught us some of these metrics, and we looked at them and found out that I think only 1 or 2 of these metrics were actually, I don't even know if all of them, I think just one metric out of all of them, was there. And so we were like, yeah, we have to step away. Right. So that's what we're bringing for you guys here. We're teaching you guys this so you guys can go and do it in your own market analysis or deal analysis. So when you guys start getting ready to underwrite, what markets are good, what markets are not good. And again, what Joseph had said, not all of these 5 metrics have to be on point. That'd be awesome if they are. But if you have 4 out of 5, I would still go ahead and take a look at it. If you have anything less than 4, then I would definitely just dig deeper and see if it's worth pursuing, and anything less than 3, I wouldn't even touch. That's just the model that we would take. But it'd have to be at least 4 out of 5 for us to say, yeah, that looks great. Good, Joseph?
I'm good. Yeah.
Cool.
Beautiful job. All
right. So guys, if you aren't following us on Instagram, here are our handles. It's mine, Ioni's, Joseph, and KJ. We would love, kind of like what KJ had mentioned earlier, if you guys are getting value from this, shout us out, tag us on Instagram, post in our Facebook group, and let everybody know that you're getting value from what you're learning today. That would be awesome. And I'm going to touch up a little bit on this again. I did it last week, but the $1 Million VIPs, I see some in the chat. Max, Rob, who else was on here? That's a $1 Million VIP, Joseph.
There's a lot of them, man. Hang on. I'm gonna get you a list.
Oh, Steven's in here.
Steven, yeah, Steven's in here. They're part of a exclusive VIP group that we have. We're still keeping it very small. We're very particular on who we want to bring into this group. It's an amazing group of action takers, and a lot of them are in here in the chat right now, chatting with you guys, answering some of the questions and adding value. So if you guys, whenever, Joseph, you can, shout them out so people in the chat can go and reach out to them as well.
Yeah, I saw Dennis Alvarado earlier. I think he popped out. Cecilia and Christopher Perkins, both in here. The most recent VIPs. They just joined up. Let's see. I'm going through the list. there's a good amount, guys. I think we have about 27 people in here. I see Lars, my boy Lars is in here. We got Lars, Max, Rob, they're always hanging out. They're always here. I don't know. I think that might be it. If you're a VIP and I'm missing over you, shout yourself out, make it known. That's what we want you guys to be put up there on that pedestal. We want to put you guys out there for everyone to know. You guys are taking action. Oh, I see Steven in the chat. Steven Steele. I think, hang on. I think that might be it.
Yeah. So I wanted to mention that real quick because it is an exclusive group that we have. It's very small. And if you want to know more about it, reach out to Joseph. Joseph can help you out and he'll tell you more on how it works. We do give these guys I want to start calling it like a mastermind session now, because it's really not like an underwriting session anymore. But these guys are the ones who invested in themselves. They believed in us and they're adding value every single day and every aspect that they can. I mean, they're go-givers, the true meaning of go-givers. And we love giving to these guys so much. So, and of course, you guys here who are watching it, who are part of the $1 Million Upside community as well, we always want to bring the heat. We always want to bring more value to you guys. And it pushes us to go and get more so we can bring back to this community. Again, if you want to know more, just reach out to Joseph and he can tell you more about the $1 Million VIP group. All right. We're at the Q&A section. Who's got some questions? Raise your hand and we'll bring you up on the stage and we'll answer some questions. Dang, no questions today?
No questions?
Did we do that good of a job?
Damn, that's awesome. For my underwriters in the chat, I see Antonio Lazala from Florida or Kentucky. I don't know. He said, I'm new here and need help analyzing deals. Hit me up. So if you're one of my underwriters out here, hit him up. He needs some help.
All right.
My chat's being all funny.
You're good.
I see Rob raised his hand.
Rob got a question.
There we go. Let me get him up here. Unmute.
Hello, my friends.
What's up, brother?
Just curious for the group, what's about the smallest population size of the city we're interested in? Like, are we going down to, tertiary markets, 100,000 people thereabouts? All the data is great, but yeah, we can.
What's the minimum?
Small towns that can pop, but they're pretty far out there, and getting the developers.
So this is what I would say, and Oscar, you add in here. The deal that we have in Tennessee, I think in the population was like 6,000 people, but here's why we did it, right? It was 25, 30 minutes from Knoxville, which is a major metro in Tennessee. So all the people that live in our area go to Knoxville. That's their metro, that's their city, so to speak. That's where most of them work, but they move outside of the city because it's cheaper rent, it's more affordable. So take those things into account as well. Like if it's just a small town in the middle of nowhere, like there's nothing close by within like 30 minutes, maybe even an hour. I don't know if I'd go that far, but these are just metrics. These are things to base, to use as a foundation, right? Use them as you will. Not every business model will be the same. You can mix and match to fit your needs. This is just our metrics, what we use based on what we've been taught. And for us, as long as there's a close enough metro that does meet these metrics and that is within a day's drive, and that is worth taking. Like I said, if this is further than an hour, I would really question that. It would have to be really, really strong. But because our property is 30 minutes, I believe less than 30 minutes from Knoxville, that's fine for us, because we know that these people, I mean, they're most of them country folk, right? Like I love being in the country. Country folk drive a little bit further each day because they prefer having that country living lifestyle, where it's peaceful, there are less neighbors, it's more close-knit, tight-knit community, but they're willing to make that drive to go to the metro, to go to the cities that they work in or whatever it is that they do. So those are definitely things to keep in mind. I would say, I don't know, it's hard to say. It really is.
That makes
really,
perfect sense. Yeah, not so
okay.
much the population of the town, but proximity, to a metro. And I've looked at data where, the city itself, the data doesn't look good, but then you plug in one of the major suburbs, it looks great. So maybe they're getting out of the old downtown. I'm in downtown Minneapolis, so I can appreciate that for some areas, they're going to the suburbs, and if there's properties there, and all the data fits. So yeah.
And
I want to actually add something to that, because I learned something else too, Rob, that some, just kind of looking at the trends 15 years ago, what I mean by like that is like job growth and population, right? Like if you were living here in the DFW area, in the Dallas area, like 15 years ago, cities like Frisco, Texas, or cities like Prosper, Texas, or Salina, Texas, all these little towns back in the day, you wouldn't even know what the heck they were. A lot of it was just land. Like there was nothing there. Fast forward to today, Frisco, Texas is one of the most freaking desired places to live here in the Dallas area. And it's its own little unique town where it's like Frisco's Frisco. And then you have little towns that are coming up that are now bigger towns where people are living at, right? And these are like Salina, McKinney. McKinney wasn't even here on the map like 15, 20 years ago. It was a lot of land. You got Prosper. That's just all these booming cities around the area of Dallas. It's crazy how big they've gone, because before, if you were to look at those metrics in those times, they were non-existent. And now you look at those metrics and they're like almost overnight. That's how much it's booming here. And so some of those people, that's like, those towns that I named are like 45 minutes to an hour away from Dallas, like specifically like downtown Dallas. And those people are migrating back and forth, or doing the commute back and forth to go and work at these jobs. So those are markets that we've seen here in the DFW increase. Like, and so for us, like now we're looking at those markets too, because those are markets that were at some point a tertiary, became a secondary, and now we can argue that they are primary markets. So, it just knowing your markets really, really well, and what the migration patterns are as well for your specific city, it's also powerful to know, because you want to know what jobs are coming here. And also if it's like a business friendly state, like Dallas is business friendly. That's why a lot of people are flocking over here, because there's a bunch of businesses here. It's a strong job growth opportunity here. Very, very strong. And as long as and one other thing I want to point out, because I learned this too, the reason why Texas is so unique, and this is going to sound kind of common sense and dumb, but it's because it's so flat, right? Texas is flat. So we have the ability to expand outwards, which is kind of unique, because there's so much land here. There's no mountains around here. We can expand. And that's why we're seeing so much expansion here in our market. People are just building around Dallas, and it's just expanding. So before, you could say, I live in Dallas, and you would probably be like if you know the Dallas market, like Richardson, Plano, those are like 20, 25 minutes away north of Dallas, and that was still considered Dallas. But now you can say, I live in the Dallas area, and now that radius is like expanded to almost an hour away, and now that's considered the Dallas area. So those are things that you want to keep in mind as well when you're looking at your markets, is, the migration and job growth and the opportunities that are coming in your market, and knowing how the expansion is going in your market as well. Hope that helped.
Definitely. Thank you, guys.
Yeah, and I just want to shout out Alexander Copen. He said, I'm a newbie here, so excited to get started. Welcome, man. Welcome. Glad to have you. It's an amazing opportunity that you joined in on this. Like, you're in the right room, man. That's all I gotta say. And Rob, thank you so much, brother. Another amazing VIP. This guy's out here taking action. This dude was damn near about to quit his job to go do something more real estate focused. That's how committed he is. He is committed, guys. So I don't know that I recommend that for everybody, but that's the mindset that he has, guys. He has the mindset that I'm going to win at this no matter what. I'm going to make it happen. So appreciate you so much, bro. Thanks for being the first question of the day, man. You have a good one. All right. I see Christopher P. My boy. He actually, I think him and his wife live in Midland. Is that right?
Yep, that's right.
Let's go.
That's so
Can you-
crazy.
Over here talking all this
Yeah.
mess about his city.
Hey, yeah, come on, man. It's not that bad over here.
No, we're just teasing you, man. It could be a good place to live, but maybe not so great to invest.
Yeah, exactly. There's a property actually here that we were looking at. It's a bunch of like kind of permanent mobile homes. It's for all for the oil field guys, and they're wanting like 20 to 30 million for it.
Wow.
But it's making so much money. I think it's making, like, I could be a little wrong, somewhere between 200,000 and 300,000 per month.
Wow.
It's a really big property, but some of those properties actually look good because of how much rent they make, because they charge a shit ton here in Midland, because these oil companies pay for their employees to live there. So these guys aren't paying out of pocket. So they're charging these oil companies, $200 a night, $100 a night for months at a time. And so part of that does look a little bit juicy to me, but whenever oil goes down, is it worth it? So that's, I would like to do some math on that one day and kind of figure out if you can still come out, ahead, better than the regular market. But
Yeah.
but yeah.
Guys,
Actually,
not to
I
say
have
that
a
it's a
question.
bad market to be. It's just that it's uncertain. There's more risk involved. That's the only thing that we're saying with markets like that, especially oil markets, is there's risk when the industry goes down. Now what happens? All those oil people leave. Now who are your renters?
Yeah.
You could potentially go from 100% occupied down to like 10% occupied over a short period of time. That's the only reason that we're saying it's potentially a dangerous market to invest. And that's not from us.
Yeah.
That was from Neil Bawa. He actually said that on his webinar. But I'm sorry, Chris.
Yeah, I
What's your
know.
question, brother?
Yeah, no. So I would just and this might be kind of a noob question, but as you know, me and Cecilia, we're still new to this, and I feel like we have a lot of beginner questions, but this is something that kind of came up recently. I actually on that property that we were talking about. So the property is going for 4 million. And the numbers look pretty good. We kind of that possible, we kind of like where it's going. But the seller doesn't want to do seller financing. So in those situations, where you like the numbers and you're like, okay, this might be something, but dang it, the freaking guy, he doesn't want to do seller financing. Where do you go next? What do you do next from there?
All right, you're gonna have to. I remember sitting down. I remember underwriting the deal, but I don't remember the entire situation. When we looked at it and we underwrote it, was that the cash offer, or did we add some seller finance terms to that situation? Because from what I remember, that I did assumptions of what I've been seeing on different loans, and it still checked out as if we were to buy it at their price. Is that right, based on what I remember?
Yeah, yeah. They're asking for, but they said that they could go down a little bit. But yeah, we did those numbers based on 4 million.
Okay. So with that being said, I'll answer the question in two ways, right? We always present multiple offers because we're gonna present that cash offer that everybody always asks for. No, I don't want seller finance. I don't want a loan assumption. I just want to cash out and be done. Great. Okay, we'll do that offer. But even though you said you don't want to do seller finance, I'm still going to present something that makes sense for me to you to either open up the conversation or for you to potentially take that offer. But my goal with that is to open the conversation. That's what I'm ultimately hoping for. So that way we can sit down and address it. Like, here's one offer at 2.5 million, and here's one offer at 5 million, and they're asking 4. But the 5 million has beautiful seller finance terms for us, and it makes it a smoking deal, even though we're overpaying. Right. So that's all we're doing, is we're presenting that offer as a way to get our foot in the door and open up that conversation to actually be more candid, and not just, here's our LOI, what do you think? Right. Because that's what the cash offer is going to do. Here's our offer, yes or no. Right. That doesn't leave a lot of leeway to talk further about it. The only conversation you can have with that one is, can you come up more? and that may or may not work. With this specific situation, we could come up to his price. We already found that out. We already looked at that. From what I remember, the question on this property was more so about the market, is how strong is that market?
Yeah, exactly.
Did that answer the question in the way you wanted?
No, for sure. Yeah, it did. And so basically, even if like the broker's telling us that the seller specifically, he does not want seller financing, we will send him an offer anyway, right? And just like you said, kind of, make it over purchase price, over asking, and just see what he says.
I would present both.
Yeah, I would present them both.
Okay.
I mean,
I would
you're
present the
presenting your
cash.
offer.
Yeah. I would present
And
the
when you
cash
say both,
and the seller finance, or the seller finance one, right? So you've got a straight up cash. That's kind of what they're looking for. But hey, present the one with seller financing as well. That way they have options, right? Yeah, I know they're not going to entertain this one, but this one may be at a higher price point than your cash one, right? So now they're looking at, okay, they're kind of weighing their options. Okay, this one is giving me what I want, or a little bit more, but this one is not where I want, but it's cash, right? At least they have two offers they can go off of. And and one of the things that you might run into, Chris, is that the broker himself may not even want to present the seller finance option, even if you give it to them.
Mhm.
That's the part that's going to be the toughest, right? Even if they tell you, hey, I don't think you should submit
legally, can they do that?
I'm not an attorney, man. I'm not. I can't tell you that.
Okay.
All I know is that they
Gotcha.
have a fiduciary duty to present what a buyer presents to them. If they do that, that is up to them, right?
Mhm.
So I would say, depending on your relationship with them, how you guys have it, whatever worked out, I would just say, hey, look, man, I would love for you to present both options, even though I know you said that they have no interest in seller finance. Just present both of them. Here's my cash, here's my seller finance, and let me know what they think. And if he doesn't just flat out do anything, well, then you really can't do much anyway. Even if you give it to them, you have to hope and pray that they will present it to their seller, right? So just kind of play it by ear, depending on your relationship. I would say do what you got to do, but ultimately also remember that you want to keep the relationship with the broker, because it could help you out long term, right?
That's a good point.
So yeah, don't burn bridges for sure, and be like, hey, present it or see you later. No, don't burn bridges.
Yeah.
The multifamily world is small. Everybody knows each other, so just keep that in mind.
Okay, cool. That's a good point.
Mhm.
Awesome.
And one of the biggest concerns, the reason why the broker wouldn't want to give the seller finance offer, is because typically they're in their mind, if we're doing seller finance, then the broker is not getting paid, right? That's not true. That's just a stigma that is around the seller finance realm. So building that relationship with the broker, like Oscar is saying, is very beneficial, because you could just reassure them, hey, we're going to make sure you get taken care of, whatever it is. But don't go promising, hey, we're going to pay you 2%, we're going to pay you 1%, or whatever it is. I wouldn't specify the number unless you already know in the underwriting what you can afford to pay based on what the property allows.
But just let them know, yeah, man, we want to offer this seller financing to the guy, but we want to make sure you're taken care of, okay.
Yeah, for sure. And
Cool.
then Sean mentioned something in the chat too that I think it's worth mentioning. He said, remind the broker he will make more money if they sell at a higher price. So also keep that in mind.
Mm-hmm.
True. That's a good point. Yeah.
And I see your
cool. That
counterpart
answers
has
a lot.
her
Appreciate
hand
it.
raised. I'm gonna go ahead and bring her up too.
There we go. Nice.
Hi. Can you hear me?
Yes, ma'am.
Nice. Well, one thing that you, babe, said, I think Joseph said, it might not be a bad place to live. I I don't love Maitland. There's not much to do. Everything is so flat and boring, but we're making money.
There we go.
Yep, there you
Blessed
go.
for that. And like you said, we might have, a few beginners questions. I have a few things here that I wrote. So for example, some of these ones maybe you already know because we were talking about, the brokers and this and that, Joseph. But so brokers, when they don't want to give you all the financials, or they are like, the T12 that you had in the presentation had a lot of stuff, right? And I've seen T12s with nothing but basically like the rent roll is just this apartment and the rent and that's it. Like no more information, and they don't give you, I think this is the P&L with the expenses, like, and then like, what do you do? I heard you tell them, guys,
It's
just give it to me.
I honestly think KJ is probably the best one to answer this, but I'll throw this out there. We have definitely seen like the financials we've gotten from we literally got our first property, the financials we got, and we did a case study on it in the underwriting course. You actually see it in there, but we only got an estimate of how much he's getting in rent and how much he pays in his water bill. And I think that's all he gave us. And he wrote it on like an envelope or a letter. That was it. And then that was emailed to us. So that's all we got to underwrite that deal with. So we had to operate off assumptions. But KJ, how would you handle that situation if you're trying to get the financials and they won't give it to you?
Well, I think it depends. Like, do they just not have financials? Like, I would ask, like, is what they gave you all they have, or are they actually like withholding stuff from you? And if they are, I would ask them like, what's the reason? Or just let them know, I can't really give an offer without, financials. Otherwise, I'm just kind of shooting in the dark, and then we're gonna have to come back again. So it's like, yeah, it's like the wholesalers who ask you to put in an LOI before giving you financials. It's like, what's the point? Like, okay, I can make up an offer all day just so you give me the financials. And then now I still have to go underwrite and give you a real offer, because obviously I can't pay that. So sophisticated brokers understand that. Some brokers just don't, they may be newer, or they don't understand like how it works and things like that. But I would just continue to build that relationship with the broker, and they should know that as a buyer you need financials. So I would just find out if it's either they just don't have good financials, or does the broker feel some type of way, because normally a broker will have you sign an NDA and just send them to you. So I would try and figure out what the reason is that they're not.
But the reason.
Yeah, exactly.
Well, that one he
would say
said
the same.
more. And we did sign the NDA. And like the other one that I told you that last Friday, that he said, we can't send any financials until you are under contract. That one we don't know yet. He hasn't found like any deals for us, so we don't know yet. But I'm waiting for that situation to say, how do you expect me to give you like anything, right? Like underwriting or anything if I don't have financials. But
That's
okay.
a red flag.
Yeah, I mean, what I
Yeah.
would do in that situation, I would just kind of mess with them, to be honest. I'd be like, sure, I'll pay 100 million for it. Here's my offer. And then just kind of wait. I mean, if they want to, that's what I would do. I mean, I'm kind of a
Don't do that.
lack of a better word today.
Don't do that.
But yeah, I mean, professionally, I wouldn't do that, because you're gonna ruin the relationship. But I mean,
But they're not being professional also,
Yeah. Yeah, I mean, that's your business. It's your decision on what to do. And that's what I love about this business. You get to choose who you work with and how you operate in your business. It's totally a free-for-all. Just remember, your reputation is your business in this industry. So absolutely protect it at all costs. You want to make sure that you are a credible buyer as well as a respectful buyer.
True.
Oh, that's a good
Okay.
question in the chat.
Yeah, I have a couple things more to say,
Yeah,
to
keep
ask.
it coming. Keep it coming.
So for them, they all might be kind of simple stuff, but so for example, we know how in Texas the taxes are high, and like maybe in Florida the insurance is super high. I know you guys look at deals in Texas, but for other people, like, is that a reason not to look in Texas? or in Florida, not for the insurance because it's too high, or some things that like specific market, that is higher than other one. I mean, more expensive.
Yeah, I mean, I wish
Still
I
makes
had my
sense, I guess, with the
banner.
cash flow.
I wish I had my banner. Like, it just depends on the underwriting.
That's what I was thinking.
Yeah,
And
as
depends
long
on
as what
Makes
I would
sense.
do is just underwrite more conservatively for those specific line items in those markets, like for Texas, just be higher on your taxes than you would think they would be. For Florida and Louisiana and all those other coastal areas, you want to be higher on your insurance. If you were part of the live previously, Oscar was just saying how an event he went to, people are writing at $800 to $1,000 per unit on their insurance. Like that's super high. We were doing like 250 to 400 before. Now that's more than double of our highest.
And
So
that's not including markets that are like, Florida or something like in Louisiana. That's like
a regular market.
Yeah. So those are just the regular markets, because we have seen an increase in insurance quotes, like a lot of insurance quotes have been rising. And I think I saw Ryan, who's in the chat. I'm not sure if he's still here or not, but Ryan was one of the ones who was talking to us about a deal, who had just mentioned that the insurance quotes have rising like crazy. And so I think, Cecilia, when you're underwriting deals that, like, say in Florida, that you know that the insurance is going to hike up, right? You want to make sure that you underwrite that conservatively, and one, be proactive and go talk to insurance people, right? Someone that can give you quotes, and don't get just one, get a couple, right? Get a couple, or ask them if you're not working on a specific deal, just ask them, what are they underwriting it on the unit level, right? Like how many, I'm doing 800 to 1,000 a unit for the insurance. Do you think that's good in this specific market? They may be like, no, you need to be at 1,500, it's one of those things that if you don't know very well what you should be underwriting in that market, something as simple as insurance can make or break the deal. That's how easy it can be. And if you don't know the market in Texas, because you were absolutely right, taxes here, property taxes are assessed every year. They change every year. And if you're not familiar with the Texas market or property taxes in Texas, and you're not underwriting for that specific buffer, then that can make or break your deal as well. And we've seen it a lot too, because we look at the property taxes, and luckily, Joseph and Ione are super amazing underwriters. So they always go and check with the county, right, to make sure they're getting the proper and the correct, accurate numbers, and then just adjusting accordingly. So those are some things that you need to know if you're going to go in those markets. Aside from the metrics that we just gave, Cecilia, like the market analysis stuff, you have to go dig deeper into that stuff, right? If you're going to be in Florida, then your insurance, depending on where you are, most likely your insurance is going to be the number one thing that you need to focus on to make sure you know in that market. Make sense?
Yes. And that gives you my next question, that I don't know about insurance because I haven't checked that, but the deal that we checked, Joseph, for example, I was getting quotes from just loans just to see, right, if we can find a better interest rate and stuff. Some answer, like they were more, I guess, friendly, or I don't know, less picky, but most of them, they gave me a huge list. We want these, we want that, and like the LOI, the contract, and many, like you say, I wonder in my head, like if I want to just underwrite a deal, right, and I'm not under contract yet, I just want to see if it makes sense to me, like so how do you get a quote for the ones that are picky if you're not under contract, or you don't have an LOI, you don't have many things that they're asking? I guess you just go with the next one.
Yeah. No, yeah, you're gonna run into that. It's a long process to find your lenders, right? You want to find people that you feel comfortable with and they feel comfortable with you. There are lenders out there that they won't, unless you have all the information, they just won't do it, because for them it's a waste of time. But what they're missing out is that relationship. They don't know who they're talking to, right? You could be the next freaking Neil Bawa or Vina Jetty, right? They don't know, right? They don't know what you're capable of, right? So you need to go and just find the person that's willing to work with someone that is newer. And there's plenty of them out there. Absolutely. There's plenty of them out there, and they will definitely, it just takes a little bit of work to go and find that right person. Yeah. And all it takes is, I would just be transparent. Hey, I'm newer into this space, but this is what I'm looking to do. I'm looking at X amount of deals, and I'm trying to tighten up my underwriting. What are you seeing as like an estimate? Like, what if for me, what assumption should I be using on my loan, on my senior loan? Because I have this deal and it looks really good, and you can even tell them the numbers. I'll share that I'll share the underwriting that I did. I'll show that, share it with you, so you can use that as a reference. Hey, this is what we have so far. Do you think this is reasonable, or do you think I'm too high, too low, whatever it is? And they can give you better feedback. You just have to find the person that's willing to work with you. And
Yeah,
that's
and also
what they take early on.
I'll throw this on top of that, Cecilia, on how to find some of these lenders, right? Because at the beginning, some of these lenders won't even talk to you because they just
You're new.
yeah, exactly. It's kind of like brokers, right? When you first start talking to brokers, some of these
Yeah.
brokers are hard to talk to, or they won't talk to you, right? And Joseph's completely right. It's because they're busy, right? Think about when you start talking to a broker, they're super busy. They're getting calls left and right from people. And a lot of times the people they're getting calls from are just tire kickers. Like they don't really do anything, right? They're just wasting their time. So what I would say, in order for you to go and go more, here's another avenue that you can do to go get relationships with lenders. Go to like meetups or go to networking events and target specific people that you want to look for. If it's an event, obviously it's going to be a real estate event, but if it's like a multifamily event, sometimes they have vendors at those multifamily events, and some of them are lenders themselves, like lenders, property management companies, insurance people. You can just go up to those tables and start talking to them and create relationships that way, or just networking around with those people in there and be like, hey, what do you do? You know, look for those specific people that you're looking for and create that relationship. It's a lot easier doing it face to face than it is over the phone or over email, right? So that's another way that you can go out there and put yourself out there and start getting those relationships by going to networking events. That'll help you out a lot. And putting a face to the name, talking in person, you know, you get their contact information. You can even pick their brain right then and there and be like, what are you seeing, right? And just get that information right then and there. But that's another way that you can do and go find these lenders.
Great. Okay. Because then if it's example like the conventional loan type, and they cover like the most that I've seen is like 80%. So you still might need, you know, another lender for the other 20% or down payment or whatever. So you do want like to have a few, like you said, relationships and options and stuff.
Absolutely. And if you're seeing 80% LTV, that's amazing, because right now
Yeah.
we're seeing maybe what, 60, Joseph?
Yeah, anywhere between 60 to 75. I haven't seen it 80 in quite a while. I mean, they're there, but the terms that are along with it are not good.
That I need to show you, because that one is 80, but I don't know everything if it's good. But
What was the interest rate on it?
that one is, it says 6 to 6.4.
Not bad. Is this
No
agency
bad.
debt or?
Yeah, I think, right? Yeah. So
Yeah.
he said 6 to 6.4. It depends on percentage of units where rents are considered affordable to tenants at 80% of the AMI. I don't know what that is. And then says prepay greater of 1% or YM, and then 5544332211 available. 12 to 24 month interest only available. And so the first thing, it says term 10-year fixed, and then it says 30-year amortization. Does that mean that only for 10 years they wouldn't change the interest rate? Is that what it means?
Mhm.
So after
Yeah.
that they would change if you keep.
Typically will also mean that it's a 10-year balloon, meaning that the note or the loan is going to be due in 10 years.
Mhm.
But it's amortized over 30 years.
So the payments, yeah. Okay. And something that they were telling me yesterday, and many things, and I was talking on the phone, right? And they were like, what's this? What's that? And I didn't know what they were. And I was like, oh, Diosito Santo. I don't know what to say. And I was like being an actress. But so for example, it says loan is non-recourse. Of course, I don't know what that is. I guess you guys know.
No, that's good.
And then
a non-recourse just means that they won't come after you if you default on the loan. They'll come after the property instead.
oh, okay. So non-recourse, that's what you want, right?
Yeah,
Definitely.
Don't come after me. And then it says loan is assumable. supplemental financing available, step down prepay available, tax returns are not required, interest only available, 80% LTV. This assumes the minimum DSCR of 1.25 is the met at maximum leverage. If not, they will go down until it's met. Yep, that's that one that I have.
That sounds pretty typical. I think what we would need to do is just take that information, because it is a little bit higher than what I had threw in as an assumption. So we're going to take the higher of like, it gave you a range to
For
say
the
like 6
underwriting.
to 6.4. We're going to take the higher and then add like 50 basis points as well. You know what I mean? So we're going to do it at like a 6.9 just to be even more conservative, because between now and the closing, it could raise more. It could go higher. So we want to make sure that we're stress testing the deal and ensuring that we're going to be good no matter what happens. So it would just take sitting down, throwing that in there. And like Oscar said, you know, you don't want to just get one quote. You want to get at multiple. The more quotes you have, the better equipped that you are. So I would get at least 3. And shit, if I had time, I'd get like 6 or 7 of them and just kind of see what happens. If it's the same thing over and over and over again, then you're pretty close on. But there's some lenders out there, like I have a guy that he is a broker, a lending broker, and he will just put it into his database and he gets hundreds of quotes from doing one, right? He'll send out one and he gets hundreds of quotes. He is a little bit more costly. It usually adds about a half a point to a point of an additional fee, but I'm able to compare with multiple different loans that typically I'm getting a better rate using him anyways.
Yep, makes sense. Do you guys have like an LOI video? Like, how do you do that yet?
Honestly, that's
No?
a good idea. It would be like a 10-15 minute video, but that's a good idea. We could definitely, I can show you how to do it, but it is a good idea for later.
It's just I haven't seen one, but
Mhm.
yep.
Yeah,
Okay,
it's just
that's
it's
all I
just
have.
a simple document. You know, you're just filling out, hey, this is the price for this property. It's at this address. These are the terms that I'm suggesting, and blah 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 type of deal.
So if you do seller finances, you do, you know, the terms that you would want there, unless you already talked to the seller and kind of what do you agree?
Yeah, I mean, even if I already talked to him, I'm gonna put it right there in paper too. I want it on writing.
See what he says.
Mhm.
Okay. Okay, that works. Well, thank you so much.
Absolutely. Yeah, you guys are crushing it. Y'all are taking action. Like I said, you guys are doing good.
Yes, we are. Thank you for your help.
Thank you, Cecilia.
Yeah, absolutely.
Thank you.
All right, brother.
I know I
that's,
had one more question in the chat, and I think that's it.
Yeah.
Let me see.
Take that
Patricia
question.
said, how do we verify the accuracy or truthfulness of the financials if, what does that say? My thing's blocked. Hang on. If we can't, what recourse do we have if some info is false or fabricated?
Ooh.
It's a good question.
Ooh. So I'd like to answer that one.
Yeah, go ahead, bro.
So obviously, Patricia, you want to do your due diligence, right? Do your trust but verify the financials, but you'll really, really know more for a fact if you go through the putting it under contract. And once you start doing your due diligence, you'll do a financial audit. You should be doing a financial audit. That's how you find out the truthfulness of the financials. And typically you want to outsource that out to a third party, like an accountant or CPA that specifically does lease audits or financial audits for multifamily. They will ask for all the financials and they'll ask for other stuff that should be included in your due diligence as part of your due diligence item checklist that you get from the seller. And you provide that information to your accountant. They'll do the financial audit, and then you'll verify if those financials are actually producing what they're telling you. And then from there, depending if there's any discrepancies, you'll then have grounds to retrade because they're not actually saying what they're actually doing. So you'll find that out more Obviously, you want to try to get that beforehand, but you will definitely always recommend that when you're in due diligence, you do your financial audits no matter what. So that's how you can find out.
Those are some golden nuggets he just dropped on you guys.
I know.
We didn't
that-
find any of that out until we had to just learn it for ourselves. And that was like after the second one, we were like, man, a lot of this stuff wasn't actually true. So we didn't really know until the third one that that's what we're supposed to be doing. So you guys are getting some gold nuggets here.
Mhm. You're welcome, Patricia. All right, guys, that's it. We're gonna call it here. If you guys found any value in that, again, please let us know. And we'd love for you guys to shout us out on social media, Instagram. You know, if you're not a part of the Facebook group, it's multifamily, the $1 million upside, and also post in there too. Let us know if you guys got any value. And other than that, I think the only other thing I have is the VIPs. Thank you so much again, all the VIPs who showed up today. We appreciate everything that you guys did and that you guys are doing. If you guys are interested in becoming a VIP, reach out to Joseph. He can help you out with that. Other than that, Joseph, you are ready to go hit that outro.
Yes, sir. I'm ready to go. I got it all set up. One last thing, I saw somebody had a question. I think it was Tanya. If you want to just reach out to me through Instagram, I'll make sure you get your question answered. And that's a wrap. You have anything else you want to add?
Happy Friday, and it's Lent.
Oh, by the way, sorry to cut you off, KJ, but I just got good news.
Hmm.
Next week, we're dropping the heat, and we're dropping it. You don't want to miss it. It's what I've been talking to you about, Joseph, with Ione. She's dropping the
Nice.
heat next week. So don't miss it, guys. Don't miss it. It's going to be super amazing. You're going to be in for a treat, what we're going to unveil. Don't miss it.
Guys, I don't even know what this is. Like I'm probably more excited than all of you guys, to be honest. Like he's been like prepping me this whole time, dropping all these hints. He doesn't never let me know on any of this. So I'm super excited to hear this, because the last surprise that I got was awesome. So the bar is set high, and Ione just keeps setting it higher and higher. So I know she's out there listening. We freaking love you, Ione. All right, you were saying it's Lent.
Yeah, they can't eat meat.
Oh, so you're just reminding me, so I like have to go eat some fish again or something.
No, I hope everybody has a blessed Friday. Everybody who's new here, it's nice to meet you. I'm KJ, if you haven't seen me before. And yeah, keep inviting people, please, guys. We really want to. I mean, Oscar and Joseph spend a lot of time. Like, I don't even know what time Joseph came to bed last night. Both of them stay up countless nights. Like, they stay up late to do this stuff for you guys. So, I mean, it would mean a lot if you guys could help share or invite people, so you know, the knowledge gets shared. But other than that, I appreciate all of you guys. It's nice to meet y'all, and those who I already know, nice to see you again. And I hope you guys had a good Friday.